Oh, Rakian's joining, right? She didn't say anything that she's not joining.
Okay, I'm letting everyone in. Kushi full screen.
Yeah, just a second.
We'll just make the creator full screen, right? We can't see the whole thing.
Stop screen sharing. I do it. Yeah, I think we can start now.
Okay, everyone's in.
Ashna, can we start?
Oh, people are still joining, right?
Okay, we'll wait.
Yeah, it is 4. Like it's 4. We'll wait till 4, 5, 4, 6. Because people are still joining. I think we can start.
Okay. A very good afternoon to all present here. The ESL and Skill Hub of Jahan College presents to you the fourth session of Innovate 2021, a week-long initiative to foster entrepreneurship and develop skills of students attending in association with Make in India and Maharashtra State Innovation Society. It says that the most expensive words in English language and stock market are, thus this time it's going to be different. And I truly believe that this session is going to be different and informative, a place for students to enter the world of stock market and cryptocurrencies, and for those seeking the secret tips of trading. Presenting the topic for the day trading for a living by Parang Mehta. Now I'd like to invite Kruti ma'am to introduce our speaker for the day.
Yeah, thank you, Somesh. Thank you for introducing the session. And now it is actually my proud privilege to present this young, talented speaker in front of this audience, large gathering today. So Parang, as you all must have realized from the topic, he is a trader. I believe, trading is his passion. He is also a full-time investor and a chief product officer at Heaven's Fire Private Limited, which is India's largest trading company, which is based in Bangalore, Karnataka. Parang, who is a bachelor and master's graduate from in the subject of finance from Jindal Business School, and he's a fresh student, I would say, because he has just accomplished his master's in very recent times, that is hardly a year ago, and he's currently a CFA level 3 student. We wish you all the best, Parang, for your upcoming exams. As an active trader in the Indian, American, and Forex markets, Parang has over 6 years of, at this early age, he has acquired 6 years of immense experience in trading in this market, in the stock market and in the cryptocurrency. And as a and he's a subject matter specialist in the areas of technical and fundamental analysis as far as all these investment subjects are concerned. Currently, Parang is occupying a position of director, CPO, and lead trainer at Heaven's Fire Private Limited, where he has already trained 1,500 plus traders and investors the art and skill of technical analysis. So, without wasting much time, I would hand over to Parang Mehta for a very interesting session, which I myself personally is very keen to attend and learn on. So, over to you, sir.
Thank you. I'm so glad to get such a wonderful introduction. So good evening, everyone. So I am Parang, and I think they've introduced me. So I'll just broadly tell you about myself. I am purely a finance student. So I have done a lot of my studies in the field of finance. So I've done my CFA. I'm going to give my level 3, which gives you a lot of understanding when it comes to very fundamental things about how businesses operate. And if you want to deep dive into finance, I think CFA is the gold standard. So since I know a lot of students must be aspiring to get into finance or the world of finance, so I highly encourage you all to give a shot to CFA. It's a very, very prestigious thing. And I think from a knowledge per se, it's going to give you immense benefits. So I've been a trader since the last 8 years now, and I have been trading in the Indian and the US markets. This session, I want to break a lot of myths. I want to tell you the real side of trading. I want to tell you how a lot of people just, even no matter how good they are in whatever they do, when it comes to finance, and I'm not only talking about the stock markets, I'm only also talking about personal finance, investing, savings. We all know we are very horrible at savings, and I think you should ask this question to yourself. At the end of every month, everyone is kind of broke, and that is where the problems start. And in this webinar, I'm going to tell you each and everything when it comes to personal finance, savings, investing, and then ultimately how to get started with trading. What do we do, and what is the skill set required if you want to get into trading? And I'll also give you a glimpse of my journey as a trader when I was, in my first year, or I think way back in 2014, where I was just starting off with my studies. So how did I get into this? What were the failures that I faced? What are some common problems that every one of you will face once you get into the stock markets? Because whatever is visible from outside, it's not exactly how it functions in real life. And as a finance student myself, I know what textbooks say, and then I know the other side of the market and how market reacts to you. It's completely different. And I will also guide you on how to look forward when it comes to, even if you are a finance or a non-finance student, how can you actually get into this and at the end of the day make money. So I'll get started, and just give me a minute. If everyone's able to see the screen, just give me a thumbs up in the chat and
We can
I
see this.
will.
Yes, sir. Yes.
Okay, perfect. So I'll quickly introduce you all to Havenspire. So we are India's largest trading community, and our core mission is to educate people about financial literacy, to make them understand how finance how the world of finance is actually structured. Because a lot of people think finance is too complicated, but actually it's not, and it's more of a life skill, I would say. And hence our mission as a company is to educate as many people as possible when it comes to stock trading, investing, and finance. We want to make each and every one of the students or working professionals or anyone in our ecosystem to be more financially independent and not care about anyone else for their finances or their financial freedom. So that's the overall objective and goals of our company. So that's how we function. So this webinar, the topic is trading for a living, and the reason the topic is for a living is because you can actually create a good income source. It can be passive, it could be active source of income from trading. And I know how trading, whenever I say trading, what comes to your head is, that friend lost a lot of money in trading, that uncle of mine lost a lot of money in trading, my dad and my parents always say stay away from stock markets, it's gambling. So I'm here to reduce, or I would say remove all of that noise when it comes to trading and investing. And a lot of people also feel, and even students, they're very they're not very outspoken when it comes to getting involved with the stock market. They feel that they're getting into some kind of betting or some kind of stuff which might be not good for society. So I'm going to break all those myths. So with that being said, I'll start off with the webinar. So before that, I want to ask a few questions to the audience, and I would like the audience to be interactive. So very simply put, how many of you feel money is the single most important thing in your life? Now, I am removing emotions, family, and all other things. I'm saying from a very professional standpoint, money is what makes the world go round, right? How many of you agree money is probably the most important thing for everyone? Even if you're attending this webinar right now, somewhere or the other in your subconscious mind, you want to make money, or you want to be skilled enough to make more money, right? Now, there are a handful of reasons. Now, the reason I'm starting from money is stock market as a profession and as a business is all about emotions. And we humans are very awful when it comes to emotions, and especially when it comes to money. So I want to first make you understand, and I want to give you a perspective of how what you think about money and what you feel about yourself will impact your performance in the markets, right? So since everyone probably agrees that money is the single most important thing, now how many of you think money is so precious to you that if it goes away from you, or if someone snatches it away from you, or if you lose it, or if you put it in some bad thing, for example, you joined a course, or you paid this money to some XYZ guy, and that basically becomes zero, how many of you would feel emotional about that? How many of you would feel, okay, yes, I lost money, and there would be some anger, there would be some disappointment, there would be some frustration? Now, when that happens, you need to connect how you actually behave in your real life. Now, whenever you're frustrated, how many of you think you make good decisions? If you're frustrated in life, if you're irritated, if you're angry, you make horrible decisions in life. And now, this is the single most important thing that you need to understand before even you step into the world of stock markets, that emotions are the driving force when it comes to decisions which involves money. And the stock market is a field or a profession where the input and the output both is money. So I'll give you a example. If you're a student, you work, you get trained, you get skilled, and then you apply for a job. you give your inputs as your work. You give your inputs in terms of time, and the output that you get is a salary towards the end of the month. When it comes to the stock market, you input money in order to take out money. Now, when that is the situation, you are putting in something which is very precious to you. And this is where you start getting emotional. And that's the reason why 95% people lose money in the markets. It's because they think it's IQ which makes you money, but it's not. It's EQ, which is emotional quotient, which actually makes you money in the markets. So this is very, very important to understand. Now, before getting into the technical side of things, again, I would like to ask another question to you. How many of you feel you are very bad at managing money when it comes to your pocket money, if it comes from your parents, whether it's your stipend, whether it's your salary, whatever it is? How many of you feel the last 5 days of the month are a nightmare, and all the time you're looking for lazy pay, you're looking for, say, any other different kinds of apps which will just give you money for the next 5 days so that you carry on with your expenses? Now, why is it very important to understand this, and how is it related to trading? So what you need to understand is, whenever you open social media, and I want all Instagram people here who use Instagram to answer this. Whenever you open social media, whenever you open Instagram, how many of you feel there are three things that you see? iPhone, Starbucks coffee, and some random reel song which will have some car, right? Everything what comes up on your Instagram feed, and I'm using Instagram as an example because I think 95% people would use this, and what you feel and what you see over there is very materialistic, right? And whenever you see that, subconsciously you feel the desire of having that iPhone, you have the desire of having that car, and you become materialistic. Now, becoming materialistic is not a bad thing, but what it does to your psychological brain, try to understand. We live in a society where materialistic things are accepted. So the more materialistic you are, the more brand savvy you are, the more people would accept you. That's what the world of social media thinks. And this makes you spend more than what you should. How many of you think your spending has increased and will increase over 30% on a year-on-year basis, right? You all I think know what inflation is, but you read inflation is 5%, 6%, right? But you need to understand that that inflation is food inflation or wholesale inflation, which is inflation of potatoes, onions, tomatoes, which you will not even bother, right? So what you need to understand is your inflation on a yearly basis is 30% only because of social pressure, or I would say maybe the kind of lifestyle we live in. We want to have the best phone, we want to have the best gadget, etc., etc. We want to have the best food, we want to have a plate of sushi for $1,000, all of that stuff. Now, what that eventually makes a difference in is your standard of living is already upgraded without you understanding the value of money, and this is where the disconnect happens. And the reason why this is important is, people, if they don't understand this, getting into the stock markets is literally out of question, because unless and until you understand what money does to you, you can't understand how money and you as a person are connected. So the reason I'm talking to you about this is, the first step to get into the world of trading is something called risk management, or something called money management. Now, when you get, say, 25,000 rupees from your parents, for example, if you're living out for college, you will have a lot of expenses, right? You have to go to, say, you have to go to party, you have to go to, say, out with friends, etc., etc. There are so many other expenses, and at the same time, you don't even think of what your future would be like. Now, everyone wants to make money, but everyone wants to be a thrift spender at the same time. Now, there are two different things that you are trying to do. Now, since my attention is to money in the first 10 minutes, I think subconsciously I might have hit your money button in your head, and you might be thinking, okay, yes, probably I do this, probably I do this. I am not good at managing money. Now, when that understanding is there, this is where the stock market starts. Now, the stock market is a place where skills can make you money. You don't have to be the smartest person in the room, but you have to be the most disciplined person in the room. Now, I am telling this, I am not a disciplined person at all. I was one of the most, I would say, indisciplined students in my school and in my college. But as I got into the stock markets, I think this is something that the markets taught me. Now, when I talk about personal finance and when I talk about savings, you need to look at it in this way. And I am a very firm believer of a book by Ray Dalio. It's called The Principles. He says anything that you should be doing or that you do in your life has to have a purpose. Now, how can stock market have a purpose? Yes, the purpose is to make money, but that's a materialistic purpose. Let me give you the purpose, and I'll tell you what the purpose was for me, because in the 7 years that I've traded, I lost money, and I'll be very, very proud to say this. I lost money for first 5 years straight. I lost over 35 lakhs. I took money from here and there. I used to lie to my parents. Okay, I want to buy this book by this person. It's costing 10,000 rupees. That used to go to Zerodha, and the next day it became zero. And this thing kept repeating again and again for 4 years of my life, and eventually I lost a very big sum. And all this while I was studying about finance. So I just understood that it's not the technical knowledge which is actually impacting my results, but I think it's a lot about how I think about the markets. And then I understood the knowledge that I had was pure crap. Whatever I learned was something that doesn't work in the market. And I'll come to that later. So first thing is, let me give you a purpose first. How many of you are grateful to your parents? Let me ask this question. Okay, how many of you are grateful to your parents of whatever you are today, wherever you're studying today, whoever you are meeting today, and probably even if you're attending this webinar, the laptop, anything, all resources are given to you by your parents, right? Now, why am I talking about your parents? Is because you need to take inspiration from them on how well they have managed money. How many of you think your parents have managed money, their wealth so well? They have sacrificed so much so for you to get the best thing, right? Now, that's your first inspiration from your parents on how they manage their money. Now, the second thing is it's time for you to start managing your money, irrespective if you have started earning, if you haven't started earning, irrespective of that. You have to understand that you have to give back to them, not in terms of money, but in terms of very good financial planning. And this is how stock markets start. If you are not able to manage your current life well, stock market will give you an extra sense of stress because of the money involved. So you need to first sort your current life. Now, how do you sort your current life? And let me give you a very mature picture of what your life is going to be 10 or 15 years down the line. And now this is very important. Just don't think it's too much in the future, but I'll tell you, if you want to be financially independent, financially free 10 years down the line, you need to understand this. Today you might be 21, 22, 23, 24, somewhere in the early 20s. 5 years later, how many of you would want to buy a car? Can I have an answer in the chat box? How many of you, this is the first financial goal of majority of millennials, is after 5 years, when I turn 28, I want to buy a car. That's the first thing. The second thing is, when you will be 27, 28, you will eventually get married, irrespective if you want to get married or not. And wedding is one of those stupid expenses. How many of you think wedding is a stupid expense? You basically spend a lot of money for your other, not your friends, but other people to drink, to eat, and to show them, right? So wedding is another stupid expense. Now, would you want your parents to be spending their savings in a stupid expense like wedding? Think of it this way. Do you want your parents to spend, say, 50 lakhs, 1 crore, 80 lakhs, 90 lakhs, all of that amount in an expense which is absolutely dumb and stupid, right? So 5 years later, you want to buy a car. Then 8 years later, you will have something called a wedding, which is again a stupid expense. And none of them are investments. How many of you are understanding this? None of them. Neither a car is an investment, neither a wedding is an investment. So the next 8 years, whatever money you're going to make or whatever money you're probably going to have are going to go into socially accepted things, which will not create wealth for you, but essentially would get you into expenses which are not important for you. Now, moving on, when you are 28, the next 5 years or the next 10 years are going to be your married first 10 years when you will get married. And 15 years later, or say 10 years after, or 15 years after you get married, how many of you think children education is expensive? How many of you think education for children is going to be expensive 10 or 15 years down the road? Even today, it's so expensive. 15 years later, you'll have to plan for that. And then eventually you plan for your retirement, right? So what I'm trying to say is, when it comes to money, you need to look at it in a very mature way. Every 5 years, you're going to have a lot of expenses. And to plan for those expenses, to make sure that you are independent and you're not in a situation where you are asking for money. How many of you would be comfortable in asking for money from anyone for any of these expenses? Do you want to be independent? Do you want to be someone who is self-sufficient, self-independent, to take care of these expenses? Because you accept it or not, these expenses are going to come, right? And I have seen a lot of my friends who are 8 or 10 years elder to me, and they are facing a lot of problems because they haven't managed their money. Now, how is it related to stock market is everyone's question. It is related to the stock market because you need to understand that stock market is not to make quick money. Stock market is not a get rich quick scheme. Stock market is a profession. Stock market is a skill. Stock market is a business like any other thing. The only thing in this is that once you acquire that skill, you can make a lot of money, provided you do things the right way. And the money that you make from it should not go to fancy Gucci's or some other random stuff which is very, very not so important for your personal finances. And it should go to something from an investment point of view, so that 10 years or 15 years down the line, your money is constantly multiplied. This is very important because a lot of people who get into trading are just getting into trading to pay off their credit card bills, to buy a very stupid some brand's belt, or getting a car on EMI which they can't afford, and trying to again get into a very lavish penthouse whose rent is say 80% of their salary, and getting into all of these stupid things, even if at all they make money. Now, the reason why I was in the first 15 minutes, I emphasized on how important money is going to become, and how smart you can be about your money, because today or tomorrow you will understand, if not today, tomorrow, or maybe 2 years later, you will understand that these things will come up, and these things might become an obstacle for you in your personal growth. So since money is pretty much understood to everyone, now let me get into the world of trading. Now, this is the money part was very important, because unless and until you understand money, trust me, you will not become a trader at all. There is no chance, because your goals, your objectives, and what you want from trading will be very, very different. So it's very, very important for you to understand that trading is going to be a gradual step-by-step process. And in that process, you need to master these money management skills, which I have been talking about. You need to think of these expenses, or I would say goals which you will have in the future, and you have to start working on them from today. Now, when it comes to trading and investing, so let me first start off with this. How many of you have slight experience or slight knowledge on what trading is all about? So let me get to business now. How many of you have ever tried to trade, or how many of you have ever got your hands on? Okay. So now I'll tell you how trading on an overall basis functions, right? So when it comes to the stock markets, you can be two kinds of people. You can either be an active trader, or you can be an investor. Now, what is the simple difference between a trader and an investor? Is in an investor has a very long-term horizon, and he's investing into companies as an asset, as a business. And this long-term is anywhere from 1 year to 10 years, 20 years, 30 years, right? So that is the investing part of things. And for you to invest, do you need money in your pocket right now? For you to become a big investor, or for you to be investing consistently, you need to have good amount of money with you today. And that's how you can get started with investing. Now you are at such a stage of your life that you will obviously not have money, because you are just starting off your earning cycle. I call this an earning cycle. A person's earning cycle starts from 23, 24, and it goes on till 54. That's the usual earning cycle. Now, obviously, you can only invest very petty amounts or very small amounts, whichever you can save, because obviously your pocket money or your salary or your stipend in your early days will not cover up for your expenses. This is a fact. And as I told you, your expenses are going to increase by 25 or 30%. So always keep this thing in your mind. Inflation for you is not 5%. It's not what Modi ji says. Modi ji will say 5%, but that is potato, tomatoes, and onions. Your inflation is 30%. And if you don't believe me, check your expenses for the last year. Which hotel did you go to? Which club did you go to? From Zomato, where did you order from? And you will see that difference. And as you grow, your standard of living will keep on increasing. And I'll give you a very blunt truth. Standard of living of life can only be increased. You can never go back to a Xiaomi phone if you're using an iPhone. Can you go back? How many of you are iPhone users? Can you go back to a 10,000 rupee phone? You can never go back, right? So standard of living will always increase. So it's very easy to increase standard of living, but it is very hard to decrease, okay, standard of living. And when it comes to decreasing standard of living, it takes a very a calculated choice to actually decrease standard of living. So one is investor. Yes, they will invest in companies, they will make money. Now let's come to the hot part of things, which is active trading. Now, like most of you, even I started off with watching random YouTube videos which said it's a strategy which works 95% of the times. This is something I just saw a video on YouTube in 2014, and then I thought, okay, trading is something. How many of you have stumbled upon trading like this, where you saw some random YouTube video pop up, and then you were like, okay, if this dude can make money and he looks awful, so I can definitely make money, and I am definitely smarter than this guy. And that's how we all think and get started with trading. And even I got started with trading like this. And then I went to Crossword, which is a bookstore, and I picked up a book of trading. And the price of that book was 400 rupees. So I read that book, and after reading that book, I just thought one thing. If this book will make me money, and if this book is teaching me how to trade stocks and make money, why the hell is this 400 bucks? I wasn't able to understand this simple thing, that if it is giving so much value, why is it so cheap? Has any one of you thought about this? When it comes to trading or investing, why are those books very cheap and why are courses so expensive? There is a difference, right? Now the difference is theoretical knowledge in trading and in the world of stock markets does not work. Stock markets are random, okay? No one can predict the markets, and no one can have a complete understanding of the stock markets. Get this into your head. Even if it's a billionaire, even if someone is starting off, even if someone has 10 years of experience, that person cannot tell you what is going to happen tomorrow, right? That's pretty simple. And with no guarantee, anyone can say, okay, this is going to happen or that is going to happen. So how do you start with trading, and what exactly do you need to learn trading? Now, I will just break a few myths before I start with the technical side of the session. Number one, if you feel to become a trader, you need to be sticking to the screen for 6 hours, you are completely wrong. You can spend 15 minutes of your time every single day and make the same amount of money of some other donkey who is stuck to the screen for 6 hours and just trying to trade every single tick in the market. 15 minutes of your time is more.
So you're on mute.
Okay,
Yeah.
I think by mistake someone muted me. Okay.
Right.
So the first myth is, I'll just repeat. The first myth is you don't have to spend 6 hours in front of your screen. Okay, that is not how trading works. There is no correlation with the amount that you spend in the market hours and the money you make. There is no correlation. The second thing is, a lot of people think there are something called chart patterns or trend lines or some moving averages. How many of you have heard about this? If you have ever started with trading, or if you know even slight bits of trading, there are some very retail concepts, and I would like to use the word retail because I'm going to make a segregation here, right? RSI, MACD, triangles, flags, How many of you have heard about all of these things? Some chart pattern, some random stuff. This is all the perfect recipe for you to lose money in the markets, period. Whatever you're looking at on YouTube is just something which is going to make you lose money in the markets. And let me tell you why. There are two sides of trading. One is retail and one is institutional. Retail traders are like you and me. We all students, we all, everyone who is trading, say, with less than 10 crores of capital is called retail investors. How many of you have heard about this term, retail investors losing money? Retail investors are like always the scapegoat. And every time market is down, everyone is kind of, retail people lose money. And then there are institutions like Goldman Sachs, JP Morgan, big high net worth individuals, institutional trading desks, high frequency trading desks. These are the institutional side of things, and I would call them whales or sharks. Now, what you learn on YouTube, what you learn in the mainstream books is retail side of trading. And just think of it this way. If making a triangle on a chart was making people money, why the hell are people studying in their life and doing jobs and doing other things to make a living? Just think of it. Do you think making a random triangle on a chart will make you money? Think and answer this. Do you think a random moving average, if price crosses above or below that moving average, would you make money? Everyone knows this. Every single person who can just go to YouTube right away can see a 1 hour random video, which is just a clickbait for them to get some brokerage accounts opened with through you so that they make money. And that's how they get you introduced to trading. Now, there is a very big understanding that you need to get here. If you don't know the institutional side of trading, you are never going to make money. So that is number one. That is something that you need to understand. Now, what is institutional side of trading? So for that and how price actually moves in the market, I need to get to the whiteboard to explain what is the exact mechanism in which the stock markets work. Okay. Before that, 3 rules of stock markets that I would like to tell you. Number one, number of buyers and number of sellers are always equal. How many of you thought buyers can be greater than sellers or sellers can be greater than buyers? So when the markets are going up, buyers are more than sellers. And when the market is going down, sellers are more than buyers. How many of you thought so? Be honest with me. Even I thought so when I started off. Even I thought so. So it's okay if you know the wrong information. Number of buyers and number of sellers are always equal. That's one. Why are they equal? Let's try to understand that. If I have 10 shares with me, can I sell it unless and until you buy it from me? There are two sides, buyers and sellers. For every buyer, there has to be a seller. And for every seller, there has to be a buyer. So if I have 50 shares of Reliance with me, can I sell them unless and until someone is ready to buy them? Give me an answer in the chat. I can't. So if there are 100 buyers, they need to have 100 corresponding sellers so that they can buy it from them. Make sense? So hence, number of buyers and number of sellers will always be equal. For every buyer, there has to be a seller, and only then a transaction can take place. And number 3 is stock market is a zero-sum game. Meaning if I win, you lose. If you lose, I win. So if the market is going up, people who are bull or people who are long in the market, they make money. When the market is going down, people who are bears or people who have a sell side positions, they make money. But every single day in the market, there are people who lose money, and whatever they lose is what other people make. So these 3 rules are something that you need to understand thoroughly. And now I will get you started with how institutional trading works. Okay. So I'll just switch my screen. I'll get a whiteboard and I'll just try to explain how does the market essentially function. So I hope everyone can see the whiteboard.
Yes, sir.
Okay. Now, how many of you have studied demand and supply in your school or in your college? I think probably everyone has ever come across demand, supply, right? Now, the fundamental principle on why prices move in the markets are demand and supply. And that's very simple. Demand and supply forces will only decide whether the stock or the commodity or cryptocurrencies and whatever I'm telling you will be applicable on stocks, crypto, bonds, currencies, cryptocurrencies, any other financial markets in the world. They will be completely applicable in all of these things. Now, demand and supply are the easiest yet the most misunderstood concepts when it comes to trading. And demand and supply in trading lingo is called support and resistance. How many of you have heard about these two terms, support and resistance? I think probably anyone who's even remotely interested in the markets would have heard about these. Now, these are the most simple yet the most misunderstood concepts that you will ever learn. So now let me give you a demonstration in 15 minutes on how you are wired to trade the wrong way, how you are always taught or you always experience to be on the wrong side of the trade, and why 95% people will always lose money in this market. So let me get started with that. So I'll use the green color to draw something called as a support or an area of demand. Now, what is support or an area of demand? Now, what does the English word support mean? English word support means to prevent it from falling or to prevent it from going down. That's what the English word support means. So when the price is falling, whenever the price is falling, it can come to a previous area of support or previous area of demand where buyers were present. So if I show it with the help of this example, this is the place where price started to move up. Okay, this is the place where price started to move up, and now it is coming back to the same place where it actually started its up move. And now when the price is coming back down, it comes back into this green area, which is called the area of demand or area of support. And now people would expect the stock price to move up. How many of you would agree with me on this? People would expect, and as technical traders, you would expect the price to now start moving up since it is coming at an area of support or area of demand. Now, this is where things will get interesting. So please focus, because the next things which I'm going to be teaching you in this webinar is going to dependent on how you understand this topic. Now, similarly, resistance or area of supply is a place where people were selling earlier, or from the charts, you can clearly see that as soon as the price approaches this red line, the price is starting to get some selling pressure. And that's the reason why the price is falling. Correct? Now, when the price comes here, what would you do? Now, if the price is starting to move up like this, what would you do? Please tell me your answers, because I want you to understand this. You have to understand what exactly is the process. We will buy. Why? Because the prices come to an area of support or an area of demand. Now, if you buy, for example, if you buy somewhere over here, how many of you understand that whenever we are trading, we are always risk managers at the end of the day? So whenever we buy something, you must have heard something about stop loss, that whenever you are entering into a position, there has to be a defined exit. What if the trade goes wrong? You will have to exit your trade, and that is an automatic order that you place while you are placing the buy order. Now, imagine you buy here. Can I say your stop loss would be somewhere here with this red line? Can I say? If you agree with me, just type in a yes. Okay. So this is your stop loss. This is your entry. So I'll just write it with a B. Now what I'm going to show you is something that all of you will correlate. And if you do, please write down a yes in the chat. Now, after you buy, what you see is the stock moves up a little, and then something like this happens. And this is the most interesting part. How many of you have seen this happen with you? You buy, theoretically, it was an area of demand. Theoretically, it was an area where a lot of people were supposed to buy, but then this happens. Now, let's try to understand why this happens, right? You need to understand why this happens. Okay. Try to understand. What did I tell you? If I want to buy 10,000 shares of Tata Motors, do I need 10,000 people to be selling that? Yes or no? I want a yes or no answer. I told you, number of buyers and number of sellers are always equal. For me to buy 10,000 shares of Tata Motors, I need someone to be selling those 10,000 shares. Correct? Now, try to understand. I am Goldman Sachs. Okay, I'll just write it here. I am Goldman Sachs, which is one of the biggest investment banks in the world. Now, Goldman Sachs wants to buy 10,000 shares of Tata Motors. Okay. Now, tell me, if Goldman Sachs tries to buy 10,000 shares of Tata Motors, where only 3,000 shares are available to be sold, I'll repeat it again. I want your understanding on this. If only 3,000 shares are available to be sold, okay, the available supply at the moment is only 3,000 shares. Okay, the available supply is only 3,000 shares, and I want to buy 10,000 shares. What do you think would happen? If the demand is 10,000 shares and only 3,000 shares supply is there, how many maximum shares can be sold? Give me an answer. The maximum number of shares which Goldman Sachs can buy is how much? 3,000? Correct? Now, what will happen if you are into a market? Forget about the stock market for a minute. If you are into a market, into any kind of a market, and you want to buy 10 units of something, and only 3 units are available, is the seller who only has 3 units and he's seeing 10 people who are standing in a queue to buy something? Do you think this seller will sell to the 3 people out of the 10 who are willing to pay the maximum price? I'll repeat it again. There are 10 people standing in a queue. A shopkeeper has 3 iPhones to sell. Do you think the shopkeeper will sell those 3 iPhones to those 3 people amongst those 10 who are bidding the highest? Make sense? So if Goldman Sachs wants to buy 10,000 shares from this 3,000 available supply, Goldman Sachs will have to, number one, only buy 3,000 shares, and number two, that too at an inflated price. How many of you feel it makes complete sense? Goldman Sachs will not be able to buy the number of shares that they want to buy, number one. And number two, they will always have to buy at an inflated price, which they don't want. So what do they want? Can I say Goldman Sachs somehow wants the supply to be more than 10,000? Can I say that? Goldman Sachs somehow wants the supply to increase from 3,000 to 10,000 or 11,000 so that they can buy those 10,000 shares when the supply is also 10,000 shares. Now, if the supply is also 10,000 and demand is also 10,000, will Goldman Sachs have any problem in buying the stock? You tell me. Will they have any problem if the supply is 10,000? They want to buy 10,000. The price is the same. So they will not have to, number one, buy at an inflated price. And number two, they will be able to buy 10,000 shares as it is. Now, come back to the chart and try to understand what is happening here. Now, what's happening is people who bought, their stop losses are hit. So can you tell me, if you are a buyer or if you are a bull in the market, your stop loss order will be a sell order, or will your stop loss order be a buy order? Will your stop loss order be a sell order or a buy order? You buy first and then you set a stop loss order. Please exit me from this position if it goes below this. So it's going to be a sell order. So can I say at this point, and please concentrate here, can I say at this point every buyer is selling? Can I say every buyer is selling at the moment because their stop loss orders are being triggered? And then there are some people who are smart retail YouTube people who will feel, since the price is breaking the support, if the price is breaking a previous area of support, what will people do now? If you look at the chart at this point, at this very moment, if you look at the chart, would you short? Would you sell? Yes or no? I want answers, right? because it is something called as a breakdown, meaning if a support level is being taken out, then the price can actually go down to the next area of support. This is what you have been taught, right? This is what you know. Everyone agrees with me? Cool. Now what happens is something that you will again agree with me, I feel. Now all buyers are selling and there are new people who are short selling in the market. So can I say there are two kinds of people who are selling, or can I say essentially everyone is selling at this point? Can I say that? The buyers whose stop loss is triggered, they are also selling, and people who are entering new short positions, they are also selling. Because of this, the supply which was 3,000 now becomes 10,000. And after this, you see something like this happen. How many of you could relate to this? How many of you have seen this happen in the markets every single day? And when the price comes here around this point is where you're thinking, the stock market just took my stop loss and then the market started to move. How many of you are understanding what happened in this area? Because this is what the major understanding of institutional price action is. Institutions will always trade against the direction you are trading, meaning they want you to sell when they want to buy, and they want to buy when you want to sell. Essentially, when you are selling and when you are forced to sell is where you are creating excess supply of shares, which is also called liquidity, for them to enter their position. Always remember, prices in the stock market will always move in search of liquidity. What is liquidity? Liquidity is the ability of the institution to buy or sell the amount of quantity or the amount of units of stock that they want to buy. And this liquidity can only be arranged by the institution or for the institution by taking out retail traders. So when retail traders are on the opposite side of the trade is where the institution is actually taking the opposite side. So when everyone here is selling, institution is buying to absorb all that selling pressure. So 10,000 people were willing to sell. An institution starts to buy. Goldman Sachs starts to buy 1,000, 2,000, 4,000, 5,000, 10,000 shares. And because Goldman Sachs has absorbed all that buying pressure or all that selling pressure, I would say, tell me what would happen to people who shorted at this place. For people who short sold at this place, can I say they will have a stop loss here? Can I say they will have a stop loss here? And their stop loss order will be a buy order or a sell order? You will tell me. Their stop loss order would be a buy order or a sell order. It would be a buy order. So now tell me one thing. Goldman Sachs bought 10,000 shares here. Okay. So they are done with their level of buying. Now you tell me, when the price reaches here, don't you think everyone would be buying because stop losses are being triggered? Yes or no? Everyone would be buying. Because everyone is buying, it increases the demand, which leads the price to go even higher. And when the price reaches here is where other retail participants, other people in the market say, oh my God, the stock is now moving up. Let me also buy. And then everyone else starts to join the bandwagon. Now you guys tell me, did Goldman Sachs pump the price? Was Goldman Sachs involved in the price move from point this to point this? Or do you think Goldman Sachs just did an imbalance between demand and supply because of their volume? They created an imbalance of demand supply at this point A, which led to a imbalance in demand supply, which led to the price going up. So try to understand, they are not the ones who are pumping the price. They are the ones who are absorbing liquidity in the market. And that is the reason for stock price movements. How many of you understood this concept that prices will always move in search of liquidity? Let me give you a quick example on the resistance side so that you are pretty clear. Now, what you are seeing is this is your resistance. The price comes here. The price is moving somewhere around here. And then this happens. What is 90% people doing here? Please tell me in the chat. What are 90% people doing here? Which is their so-called breakout, right? Which is the stupidest thing to trade. So people are buying because they feel it's a breakout. And what they're doing is they're placing a stop loss here, okay? They're placing a stop loss here, which is a sell order, Now you tell me, if Goldman Sachs wants to sell 10,000 shares of Tata Motors, can they sell here where everyone else is selling? You tell me, you think and answer. Can Goldman Sachs sell where everyone else is selling? Because if everyone is selling, what you see is a 2020 March market crash. The market did not crash because a lot of people were selling. How many of you understand this? How many of you observed what happened in the third week of March 2020? Nifty, which is the benchmark index of India, was trading at around 12,000. And in 7 days, we came back all the way to 7,500. How many of you observed, noticed, or at least know about it? Correct? Now, do you think the price fell because a lot of people were selling? If you feel so, you are incorrect. The price was falling because there were less people to buy. So now there are a lot of people to sell, but very little people to buy. So when you want to sell something and no one wants to buy it from you, what would you do? Would you reduce the price at which you want to sell? Yes or no? You would reduce the price at which you want to sell, correct? And that is what all investors did. So basically, if institutions and retail people, they start selling together, something like 2020 crash will happen. And that is the reason why institutions cannot sell where you want to sell. Is this part clear to everyone? Is it understood to everyone? If yes, then I'll continue. So basically, when you are buying here, and a lot of other retail investors who are, say, trading a breakout or following random Telegram tips or doing all of that random stuff, they are buying, putting a stop loss here. And as soon as the price starts to move up, this is where Goldman Sachs knows total demand is somewhere close to 10,000 or say somewhere close to 9,000 shares. At this point, the demand was only 3,000 shares. So when the demand was only 3,000 shares, they obviously cannot sell 10,000. But now at this point where the demand is 9,000 shares, do you think Goldman Sachs has enough liquidity to dump 10,000 shares? Yes or no? Do you think Goldman Sachs has enough liquidity at this point to dump 10,000 shares? Yes, they have. And when they start selling, all the buyers, all the breakout traders, all the people who are buying, they are confused to understand this, that everyone is buying, then why is the price not going up? Because you are nothing, you are not buying the breakout. You are just becoming the opposite side of the transaction, which is initiated by Goldman Sachs. Goldman Sachs initiated a transfer or a sell order of 10,000 shares. Who is buying those 10,000 shares? Is the breakout trader buying the 10,000 shares? Yes or no? The breakout trader thinks he is buying the breakout, but essentially he's just helping Goldman Sachs fill their sell order. How many of you are understanding this part? And when this happens, price starts to fall because there aren't enough buyers to now buy, because all breakout traders have already bought. And when the price is trading here, obviously they will not buy more. As the price touches this point, what will happen? Are all the breakout traders out of their trades? Yes or no? Is their stop loss triggered? And obviously their stop loss is going to be a sell order. Make sense? People who bought, their stop loss will be a sell order. And when their sell order starts to get triggered, can you tell me what are people doing here? Can I say even Goldman Sachs is selling at this point? And can I say the breakout traders or people who bought, are also selling. Can I say that? Can I say at this point, everyone is selling? And that is why the price will move down like this. And then you understand why this breakout failed. So this entire concept is called liquidity, or understanding what is liquidity and how this liquidity is played out in the market. Now, you would also want to understand, okay, sir, in theory, it looks pretty good. Okay, I understand that this is liquidity. This is how institutions do. But in the live market, I completely have no clue on how to actually apply this. Now, liquidity is just one step or one part of understanding institutional price action or institutional trading. There are 8 other building blocks like liquidity, which go on to make you understand where did the institution participate and how you can literally follow smart money footprints. Meaning, whenever Goldman Sachs is buying, there is one problem that all of these FIIs will always face. That one problem is they cannot execute their entire order in one go. How many of you agree with me? A big investor, a big institution cannot buy 1 lakh shares of Tata Motors in a single day. They will buy this over 5 days. They will buy this entire chunk of shares in 4, 5, or 6. They will do it in, small chunks in some periods of time. And that the first time they do it is where we understand where they were involved. And that is how we start trading them. So now let me give you some real life trade examples from today, the trades that we took today, and some trades from from the past on how this looks on a chart and how those trades were able to be captured by us. And I will show you what students who learn institutional trading, how different it is from very retail side of trading that you always go through everywhere on YouTube or any other place. So I will share my screen and I will take you to the place where I will show you how this thing actually takes place when it comes to the markets. So just allow me a minute and I will share my screen with you. So, okay. Okay, I believe you can see my screen. So let me tell you and let me explain it with the example of a trade. Okay. Somesh, is everything visible on the screen? I've
Yes,
zoomed it in. It's perfect.
Yes,
Okay.
sir.
So this is Indian Energy Exchange. How many of you have heard about this stock? This stock is actually very good fundamentally, and I'll talk about fundamentals, IPOs, all of that towards the later half of the session. Indian Energy Exchange has been a stock which is it's on a roll, right? And it's one of those stocks which has a moat around their business, and this is one of those stocks which has a huge potential, and essentially they have a monopoly in whatever they do. They are into energy trading and energy distribution business, and they are one of the best in what they do, and probably one of the only players who exist in the market. So now this is a trade that we took on Indian Energy Exchange, which is called IEX. Now the entry price, and I'll just try to annotate just to make you understand. This is the entry, 643 rupees and 25 paisa, and 641 rupees 25 paisa is the stop loss. Meaning, how much risk do we have per share? 2 rupees risk per share is what we have. Meaning, I want to buy at 643.25. If it goes to 641.25, I am out of the trade. I will not be trading and I will basically book a 2 rupee loss per share. And that's my trade idea. Now, for people who know anything about technical analysis or who have been studying patterns, trend lines, moving averages, etc., do you, and I want honest answers. Okay. Do you see any trading opportunity here? And let me draw a few things for you so that you can maybe try to understand it and maybe get some clue on what's happening. Do you see any trading opportunity here with whatever you know? How is this an ascending triangle? This is not an ascending triangle. Essentially, what this will look like is something like this. This is something, it will look like this. So what would you do when the price comes here? According to the rules, what would you do if the price breaks this line? Would you be willing to sell? Right? And also, if you're looking at these candlesticks, which are nothing but telling you how price has moved, right? So can I call this a rejection at supply? Can I call that? Can I call it, okay, there is some rejection at supply, and that's what's been taught to you, right? That the price has been rejected, so hence there is definitely no long at this point. And if you draw a simple trend line, which is absolutely the shittiest thing possible in the world, and I will tell you why. This is giving you a short trading idea at this point. How many of you agree? If you don't agree, please tell me. Basically, this is how a amateur trader will look at a chart, right? Now, what also you can see, can you see any volume action, or can you see any volume activity happening in the chart? And how many of you have learned this, that when price moves with high volume is when we have confirmation? How many of you have heard this? When price moves with volume, pure crap. Good recipe for you to lose money. Now we are entering when there is absolutely low volume, when there is absolutely no trading idea on the long side. And this is where institutions are quickly starting to load up their positions. And I'll show you what happened in this trade. So this is 1:06 p.m. 1:06 p.m. is where we entered the trade. At 1:10 p.m. is where the price started to move slightly, and the price was trading at some 652, 653 level, something of that sort. In about 4 minutes, the price started to move. About another 4 minutes later, can you now spot some candles? Can you now spot some volume starting to kick in? This will now make you interested in the stock, but can you enter now? This will make you interested in the stock, but can you enter now? Why? Because the price has already run up, and this, you will say, it never gave me an opportunity to buy. Can you now see volumes? Don't you think every retail trader is interested here, but was not interested here? Every retail trader was not interested here, but is interested here. But when we trade the institutional way, we are interested here so that we capture this. And we are already up 5R, meaning the amount of risk that we took, we are already up 5 times of that. And this is where we're booking some profits at 1:14 p.m. So see, 1:06 p.m. is where we took the trade. In about 8 minutes, we are capturing 7 times of the amount that we risked. Now, coming back to the first myth that I broke, do you need to trade all day? Or do you need a good trading setup with a well thought trading idea, which you can execute within 20 to 25 minutes and then just go home and enjoy, right? This trade is still not over yet. This is 1:15 p.m. and now is where everyone is looking at this breakout, which was this area. And if people enter here, they're absolutely, it's absolutely a very bad idea. But I will tell you how the stock moved by 1:39 p.m. Okay, so 1:06 p.m. we took the trade. In about 30 minutes, we entered here, and this is what you see. Now you tell me, do you want to catch these moves, or do you want to capture, just this move and be happy with, okay, I am a trader? If you are a trader, you need to be capturing this. If you are not able to capture this, don't call yourself a trader. Do you think this definition is okay for a trader? If you are genuinely trading and you're not capturing these moves, you are not trading. You are just trying to try your luck whenever price is moving up or down. Now, this is one of those examples that I wanted to show you. Now, let me give you another example. This is All Cargo Logistics. Again, another very good company, fundamentally. all cargo logistics, and this is where we are going long. So this is 12:25 p.m. We're entering at 273 rupees 70 paisa and 271 rupee 90 paisa as the stop loss. Again, a 2-point risk is that what we have. And again, if I show you how people would see this chart, is number one, people would see some rejections, and then the other thing that people would see is I could see this, and then this red candle is a reason for me to sell. How many of you would agree? This big red bull bearish engulfing candle could be the reason for a lot of people to go short on this stock. Why? Just because they're thinking only one directional, that my trend line, which is this, is gotten broken with the red candle, and hence I want to sell. Now, let me tell you one simple thing before I explain you this example. How many of you use trend lines? And now, if you want to ask me what is a trend line is nothing but a line which you can randomly draw on any chart at any point, and you will still be right. But eventually, you are actually wrong. If you use trend lines, stop using them, because they are the best ways to fool yourself. Now, let me explain how. Is anyone who has ever used trend lines or use, this thing that I am drawing a line here, and if the price is coming to this line, I will be looking to buy. If the price breaks this line, I would be looking to sell. If you think in this way, or if you think this is the way trading works, this is absolutely not the right idea, because you are the same person who will draw a line here, and then once the price has moved, you will again draw a line here, and then you will trust this line. How many of you have done this? You first draw this line, and then you immediately forget this line, and then draw this line and see, oh my god, no, this is right, this is wrong, this is right. This is just your, basically these are stupid concepts you're playing with your head, right? So that is why I was telling you, making random triangles, making random lines on your chart is not what makes you money. You need to understand price. Now, coming back to this example, again, there is no volume whatsoever. Again, no reason for you to go long. We went long at this place. Our stop loss was somewhere around here. And let's see what happens. 12:26 is where this move starts to come, and 12:25 is where our entry is. Now, I just want to make you understand the level of preciseness that you can get when you know what is actually going on in the market, right? So 12:25, we took the trade. 12:26 is what's happening here. Now, if you want to understand if people enter here, what will happen for people whose breakout has happened? How many of you agree? The breakout essentially has happened. So it gives people a green signal to enter. How many of you agree that the price has broken the previous areas where it stopped out? So now when the price is moving up with volume, again, in retail trading lingo, price is coming up with volume. So it is a definite buy. And I think obviously your stop loss is going to be here. You can't set a stop loss here, and neither can you set a stop loss here. We are setting a stop loss here at this point because we entered here, right? Now, let me show you what happened in the next 20, or I think next 2 hours. This is where breakout people entered. And what happened here? Can you tell me? At this point, what happened to them? Are they out of the trade? Are they already out of the trade? Because they are entering at this point and then obviously setting a stop loss here, which is making them exit their stop. But since we entered here, our stop was this, right? So we are still in the trade. And after that, what happens is, you will see from your own screen, look at the volume spike, look what's happening here, because institutions were starting to buy from here and not here. And you need to understand this, right? And then this happens after another 10 minutes. This happens in another 5-minute candle. And then when you look at the chart, do you want to be a part of these moves? Do you feel that it makes a lot more sense to take only 1 trade or 2 trades a day, but trades of high quality, trades which make sense, and trades which are into the institutional flow of the market, right? So this is how basically institutional trading works. right? Now, again, there are numerous examples. There is this DLF example, which basically we entered here. I'm not going to explain this example to you, but again, for people who are trying to trade this, their stop losses are hit, and this is not the place where you should enter. We're entering somewhere around this place, and after some time, what you see is something like this happening. And again, only a 20-minute trade or maybe a 25-minute trade in DLF, right? This is where we entered. This was a stop loss, and this is where we are booking our targets, right? So again, this is again not as complicated as you think it is. Now, again, another example is Bajaj Auto. I think you must have heard about this company. Again, we are entering at 12:03, and I'll just quickly fast forward. What happens after that is you can see that only after we trade with the smart money concepts is where we are involved before the volume action. How many of you are how many of you agree? If you want to be a part of this move, you have to be in the trade before this volume expansion comes. How many of you feel it makes sense? Before institutions buying, if you are not there, you will be scared to buy here because you feel the price move has already happened. Correct? Now, all of these are old examples. Let's look at some example from today. Is there anyone who traded today amongst you, or is anyone who followed the market today? Okay, Vikas says yes. Okay, cool. So if you did, I'll just show you. I'll show you. This is our Havenspire community Discord server. So this is where I'll just quickly first show you. So this is where everyone, 4,000 traders trade every single day. This is where we interact. There is a sniper hotline. So basically one needs to trade news. No, not at all. Now, trading news is a separate topic. I will come to that. I'll explain. I'll come to that, Nawaz. But trading news is not the correct way to do it. Trading catalyst is the right way to do it. So this is our community Discord where everyone essentially is on the trading hotline, trading together. Everyone is sharing their trading ideas. Everyone shares their profit and loss statements on how much they made, how much they lost, what is happening to their trading portfolios, how are they actually applying the concepts that they have learned. And again, it's a very fun place to be in. Everyone shares their trading ideas, and that's how the community-based learning happens. They also will share their trade breakdowns on what they think is happening, what can move, what stocks are there which can move. And then they'll keep on updating each other about what is the latest thing that's happening in the market and what are the trades that they are looking forward to take. So like that, we have something called sniper shots where I'm just going to tell you the trade that we took today. So for example, this is India Bulls Housing Finance. I don't know if you've heard about this company. Since you guys are from Bombay, they have a very good office. So I think you must have seen that office sometime. So basically, this is what is happening in the stock at this moment, and we have entered at 652 rupees 70 paisa, and the stop loss is again 2 rupees. This is the risk in the trade. 2 rupees per share is the risk in the trade. This is what the chart looks like when we are entering the stock. This is India Bulls Housing Finance. Okay, and then what happens is at 11:33 is this is what happens to the stock. So we entered somewhere around close to here, stop loss here, and then this is what happens after 15 minutes of us taking the trade. And towards the end of the day, what happened is this. So we entered somewhere around here. This is what I was showing you earlier, and then we caught this entire move today. So this is again 5 times. How do you know where the institutional flow is coming from? There is institutional price action studies, Nawaz, which leads you to make analysis in such ways, right? So India Bulls, again, this is something which moved like this. Now another stock, IEX again. So this is where IEX, the entry is given by one of the mentors in our community at 11:26 p.m. This is what the chart was looking like, and towards the end of the day, this is what happened. So again, the entry was here, and then you look at a single-sided vertical move that happened, and these are trades from today, right? So this is the kind of move that as a trader you would want to capture. Now, similarly, so since someone talked about trading news, now try to understand there are two different things. Okay, one is news and one is catalyst. News is anything which is about the company, which is anything about the markets. But then there is something called a catalyst, which is that news event which impacts the business models, future earnings, or I would say future cash flows of a company. And that is how you trade those catalysts. Any big broker upgrading a stock, any material information that the company has released which is leading to increase in future cash flows for the company, those are catalysts. For example, Jeffrey is saying on Dixon, this server to join the link, this is exclusive to Havenspire members. So basically, we have something called a masterclass. So you can check out in the Instagram page or just go to the website and you can see that thing. So that's a lifetime membership that we have. And these are the members who are essentially our students who learn this. So what I was saying is when it comes to catalysts, you have to understand the business of the company. For example, how many of you know about a company called Escorts? Or Escorts. How many of you know what does Escorts do? Or Mahindra and Mahindra. Let's take example of Mahindra and Mahindra. Do you know what is Mahindra and Mahindra's majority source of income? What do they sell? Mahindra and Mahindra, what do they sell? What is the thing which makes them maximum money? And obviously you'll get content like this, which is curated by tractors and commercial vehicles. Tractors is their major source of income, right? So now when a catalyst is when you know that farmer, or I would say agricultural produce in India month on month has increased, this is a catalyst which will lead to stocks which are related to agriculture, say Chambal fertilizers or UPL or Mahindra and Mahindra, VST tillers and tractors, Ashok Leyland, all of these companies will start doing well and their stock will start moving up. So a catalyst is that kind of news event which will tell the investors of better future cash flows or better earnings going forward, and that is how stocks move. For example, if when this Omicron variant news was coming up, when everyone was like Omicron is something that is not being cured by the older vaccines and there would be some extra shot that's going to be given, you should look at stocks of Lal Path Labs, Metropolis, Fortis. What do they do? These are diagnostic centers. So if you want to get a test done, you would either go to Metropolis, you would go to Lal Path Labs. So these stocks started to do well. Apollo Hospitals, that stock did extremely well. So these are catalysts. A news is, for example, Rakesh Jhunjhunwala is investing in India Bulls Housing Finance. That is a very blah news which you shouldn't be trading because you are the last person to get this news. And for that, there is something called catalyst, as I told you. So in our community, we tell them what exactly is the catalyst for what company. For example, Indigo SpiceJet, the aviation ministry mentioned that it is watching the emerging market situation. So basically, they will notify the effective date of resumption of scheduled international passenger service, which obviously is a very big business for Indigo. And now what you need to understand, and see, stock market is not only about knowing, okay, this is how you read a chart. You also need to understand business models of companies. For example, if the DGCA, which is Department of Civil Aviation, if they say they are increasing the capacity of passenger flights from 50% to 75%, which stock do you think will be most impacted? Which airline is the market leader in India? You guys tell me. And obviously it should be publicly listed. Indigo, correct? So now whenever DGCA issues some statement which is good or bad for the industry, you shouldn't be trading SpiceJet. You should directly be trading Indigo because that is the market leader. They sell the maximum number of tickets, right? So recently the DGCA announced that these airlines can now start serving meals in cabin. So again, Indigo moved pretty sharply on that front. Now, if you want to learn for free, if you want to learn a lot of content, I'll just tell you a free resource that we give so that you can have the ability to kind of understand things in a very, very meaningful way. So you can log on to Havenspire Academy, which is academy.havenspire.in. This is our platform, and you can enroll for a free trading and investing library course. Now, this course is basically a lot of webinars. So this is, and you can also access live trading videos. These are pretty old. Again, the actual ones are for um, our members, but I would just recommend you go to this free trading and investing video library. Here you will find a lot of resources when it comes to trading, investing, how to do risk management, how to do position sizing, all of those things. If you want to learn, you can learn it for free. You can come here for free. You can sign up. And these videos, if you are already a trader, or even if you are not a trader, if you want to invest, this will give you very good insights on how you can get started with these things. So that is how you can learn. So since someone was asking about this thing, yeah, or I think you can just Google Havenspire Academy, and then you will get it, Guru. That's how you'll get. Now, coming on to my final bit of my presentation that I wanted to give you, and this is where, since now you understand what are the things that takes it for you to become a successful trader, it's all about institutional trading. And since institutional trading is not something which is very commonly known and understood by people, I would highly recommend you guys to explore more if you are interested in trading or investing. Now, coming on to the next bit, and since I already told you about your income management skills, and always try to understand, even before you start getting into trading, if you don't manage your personal expenses or personal finances in the first place, you are never going to become a good trader, because good trading starts with managing good money, or managing money in a very good way. And this is how a usual person's pie chart of expenses would look like. More than 50% will be general expenses. Some would be spare cash, some would go into EMIs of your phones or your cars, etc., etc., and then very little is left for savings, right? And you don't even know how compounding can literally multiply your money. Now, another thing, just to motivate you, if you want to get into trading as a profession, and this is for finance people who are already studying finance, is big bulls like Rakesh Jhunjhunwala, Rakesh Damani. I think if you've watched Scam 1992 web series, you know that these guys were the bear cartel, right? These guys were people who were traders. They made money, and then all of that money is what they invested in the markets. So a transition is, when you are young, you have the risk appetite, you can take the risk, and then with that risk you can make some money, or you can generate some returns for yourself, and then park that money into the right assets, right? So this is Radhakishan Damani, this is Rakesh Jhunjhunwala. Now I will be sharing a book with all of you. I think I'll give it to your coordinators, and this book is something which I highly recommend. The New Trading for a Living by Dr. Alexander Elder. Now, this is not about any strategy. This is all about your psychology, discipline, and emotional control that you need to become a trader. For people who play poker or who have some experience in playing poker, I think you will understand this really well. Bankroll management, psychology, and emotions, these are the three single most pillars, or I would say the most advanced pillars of success. Even if you know all the best strategies in the world, if you are not emotionally stable, if you don't know yourself, you are not going to make it big in the market. So this particular image just shows you that these sharks are someone who will always be in the opposite side of your trade. So for you to become an active trader and make money from it, you need to be on the right side of the trade. And that is why you should be investing in your trading education. It could be from anywhere in the world. It could be from your brother. It could be from anyone who you know knows about trading. And specifically, institutional trading is what you should focus on. And always remember, if you want to get into trading and you want to do trading for a living, you need to have a trading edge. Trading edge is nothing but a USP, your USP. How how can we differentiate ourselves as traders from other people who might be losing money in the markets? And that, for that, you need a community of like-minded people, and that's what is, I think, something which is required at your age. Now, when it comes to investing money, how many of you missed out on Bitcoin, Ethereum, and Decentraland? How many of you missed out in investing in them when it comes to cryptocurrencies at the right time? How many of you missed out on how to mine cryptocurrencies? And how many of you have still not understood what the hell are NFTs? Now, all of these things are evolving so quickly that if you don't really understand them at the right place, you are missing out on a lot of opportunities. Now, I'm not telling you will make a lot of money. I'm just saying, since blockchain, forget about cryptocurrencies, blockchain is in itself is such a revolutionary technology that you can actually build businesses out of them. Forget about trading. You can actually build businesses out of them. That could be one of your USPs if you are looking forward to, get into entrepreneurship. A lot of companies are using blockchain to enhance their business models, right? A lot of good IPOs you miss out on because you don't have people talking about these things in a very mature way, right? IRCTC had a immense rally after they announced that they're getting into the cruise lines business, after they're getting into the Tirth Yatra business. So again, that was a very big leap. Tata Motors, I think now this is everyone's second ITC of the world, where every second person is invested in Tata Motors because of the whole EV thing. But they have invested at such high prices. No one was looking at Tata Motors when it was 80 rupees, 100 rupees 6 or 7 months back. Now, when it's touching 500, everyone wants to be in that bandwagon. So again, when you learn technicals, you can understand what stocks can outperform the market, and hence you can make some additional returns from that, right? Now, this is what essentially we do. So we basically give you a community of people who you can gel well with, or you can learn from them, and that's what we as a company do. That's essentially what we help students, working professionals in our community. We have over 4,500 people now. They are 70% of our students like you, and the other 30% are working professionals and other people. So the last part, and I would like to finish on this note, is always try to understand, irrespective if you want to get into trading or not, you want to learn trading or not, investing is something which you will always do. Irrespective if you like it, you don't like it, you will have to do to compound or to multiply your money, right? And now, when that is the case, you need to understand that there has to be a passive source of income that you should be building. It could be through investing, it could be through minting cryptos, it could be through anything. And you need to do intelligent investing. You should not be investing in some random 14% return giving mutual funds which is told you by some XYZ random person. You are the millennial generation, you are Gen Z, you can generate a lot more return by just being smart, right? So if you have the network of good traders and investors, and if you are want to become financially independent, you can look forward to actually think about your future in a very mature way, so that you guys are well developed and well skilled enough to actually look forward to your this thing. So that's an end from my side, and I would like to open for okay. So I'll just quickly tell you about the masterclass and what the masterclass is all about. So basically, the Havenspire Masterclass is India's most loved trading course. This is what our students tell us. We have trained over 4,500 people for the masterclass, and we give them a 12 module intensive course. We teach from the very basics. So we teach across 12 modules. It's a 12 module, 15-week course, live sessions, and a mix of pre-recorded sessions, which starts from the introduction to stock markets and teaches you everything from market analysis. Institutional price action is where we are, where we specialize in. We will teach you algorithmic trading also. We teach you trading setups. We teach you the world of derivatives, futures and options. Commodity markets, if you want to trade in crude oil, natural gas, aluminum, copper, all of these things, you can even do that. Forex, US markets, cryptocurrencies, and then of course trading psychology. This is what we cover, and this entire course is more than 120 hours of content worth trading. So if you want to, if you want to get into trading, and if you want to learn, you can check out our Instagram page. It's by the name Havenspire, or you can also go to havenspire.in, which is the website, to know more about this. Now, within this product, we give some features which might be something that you would like. So we live trade with all of our members so that you do your theory and practical together. We have something called sniper shots, which I just showed you, the call outs that we give in the live market, so that whatever you study, you can practically apply in the live market. Then we give you a trader's toolkit, which is 5 or 6 tools which are quantifying or gamifying your trading experience so that you know where you're going wrong, you know where you're going right, and you get access to premium news from Bloomberg, Cognisis, and a lot of other media, leading media outlets, so that you are informed and you stay to the top of your game. So that's what we offer, and we have a Discord community which I just showed you. It's full of like-minded, interactive people. So that's what we offer. So if you are remotely interested, you can just get in touch with me or the Havenspire Instagram page. One thing, since you guys all are students, we run a discount on students. So we give a student scholarship. So our program is priced at 35,000, but since you guys are students and since you are Jai Hind students, we can give it to you for 22,000 rupees. So we are giving more than 40% slash to other students. We give it for 26,500. But with Jai Hind, we have a very nice relationship. So we are going to give it for 22,000 rupees. So if you are interested to enroll anything of that sort, please let me know or DM the Instagram handle of Havenspire and they will get back to you. Any questions, anything? Okay, so Joy has a question. Why should one choose CFA over FRM? What's the major difference? Okay, so you need to understand CFA is all about investing in the world of stock markets. Okay, you are getting into managing other people's money. You're getting into investment banking per se. When it comes to FRM, FRM is all about managing risk. Okay, so you are a risk manager and you are more inclined to manage risks of energy companies. Now, it's not only financial risk, it could be a risk of anything. So FRM is like a very whole and soul dedicated profession when it comes to risk management. CFA is whole and soul dedicated to managing investments, managing retirement portfolios, managing pension funds, managing other people's money. How safe is trading and investing in cryptos as compared to stock market? See, if you know what you're doing, crypto is going to be, can be safer. For example, people don't know anything about the stock market and they just randomly buy any penny stock or all of that. If you want to compare with that, crypto is safer, but in general, crypto is definitely more risky. Crypto needs a better risk appetite because of the volatility that is there in the cryptocurrencies market. Like your portfolio can be down 30% and you have to smile. Okay, when it comes to Bitcoin, Ethereum, when it comes to other cryptocurrencies, you can't cry if your portfolio is down 25% because that's the kind of volatility that you need to digest. In the stock market, this kind of volatility will come only once a decade, right? So there is a big difference. There is a big difference in volatility. When it comes to trading, crypto is much more lucrative than stock trading because of the different kind of leverages that you can get, different kind of things that are happening in the market. There are so many things. Like even as I speak, I think Binance and Coinbase will come out with 2 new features today. So I think that's a very, very good space to explore in. Which is the best time frame to trade? Adit, there is no best time frame to trade. It depends on what kind of a trader you are. If you are someone who can take very quick decisions, if you are literally a robot, you can trade the 1 minute time frame where if your emotions don't affect you. I personally trade the 5 minute and the 15 minute time frame, and I personally trade intraday, but my time frame of trade is like 30 to 40 minutes. I don't take 10-minute trades. I take 40-minute, 45-minute trades, and I'll take 1 or 2 trades a day. How much percentage should savings or earnings should new traders trade? It depends. Okay, so your risk appetite should be of that. Don't take it in terms of percentage. Okay, don't take it in terms of percentage. I think for example, if you get 20,000 rupees, or say 10,000 rupees, if you get, I think not more than 20% you should look to invest or put into trading. When it comes to trading, you should only put like 10%. When it comes to investing, yes, you should ideally put 20-25%, irrespective of the markets. What are your views about TradingView app and stock? TradingView is probably the best tool that you can get, and I would highly recommend you don't use Chart IQ from Zerodha. It's very bad. Just use TradingView, and that is everything when it comes to a trading. What about risk to reward ratio? Okay, risk reward ratio is basically, see, when it comes to trading, nothing is obvious and nothing is certain. Okay, so you take 10 trades and you wish to win 70% of the times, meaning 10 trades you take, I want to be right 6 or 7 times, and the times I am right, or the 6 or the 7 times I am right, I want to make 4 rupees or 3 rupees for every 1 rupee I risk. So for example, I take 10 trades and my per trade risk, which is called R multiple, is 1,000 rupees. So when I lose these 3 trades out of 10, I lose 3,000 rupees. But the 7 trades I win, I make 3,000 per trade. So I make 21,000 when I win and I lose 3,000 when I lose. So overall, I'm only profitable 70% of the times, but I am still making 18,000 rupees because of my risk reward ratio. So if I'm risking 1 rupee, I want a reward of minimum 3 rupees, so that even after a good trade, even if 3 trades hit my stop loss, I am still break even. And it is a business. You have to look at it from a business. Do you think metaverse will will affect trading crypto? See, metaverse is definitely going to be a very big thing. People are literally buying land, okay, on metaverse worth 10 lakhs, 15 lakhs. So metaverse is, see, it's something which is still, I would say, not mature as of now. People have a very different view of metaverse, and I think a lot of people are actually investing in metaverse even without understanding it. I understand metaverse, I understand the applications of it, I understand other bits of it, but I don't really see the inflated prices making any sense. So yes, there are Decentraland, Mana. Look at the spike that this cryptocurrency is having because of their exposure for metaverse. So definitely, it's going to affect positively only. It's going to impact. And since Facebook, which is now called a Meta company, is also getting into the metaverse scene, so I think it's going to be very big. WazirX is horrible. Don't use WazirX. If you want, you can use CoinDCX, Binance. I would highly recommend Binance to you, CoinDCX, or another. I just forgot one more name. WazirX is bad. Just don't use WazirX. Okay. Which indicator should you use? No indicators. Okay. Only price action. If you really want to use an indicator, only use the VWAP. Otherwise, all indicators are purely crappy. Okay. They are, just try to understand. Since Adit asked this question, let me explain it to you in a very mechanical way in less than a minute. Indicators are what? They are just telling you some outputs about price in a very different manner. Indicators use price and volume as the input, and they give you a value as the output. Now, unless and until price and volume have moved, your indicator will not move. So why do you want to trade with an indicator which will only move after price and volume? So rather just focus on price and volume and trade. Why do you want to focus on indicators which will give you an answer after price and volume have moved? After something has happened, it is going to tell you, okay, this has happened. This is practically useless. Can you give the ratio of trading in stocks, future investments, mutual funds, etc.? Okay, good question. See, trading capital should only start with, say, 5,000 or 10,000 rupees, not more than that. And you have to understand, in the starting or the beginning phase, you are still learning, you are going to lose money, right? But when it comes to investing, I think 30% or 25% of your total income may be coming from your parents, like pocket money or any other thing. 25% definitely should be going into investing money. With that 25%, I think 70% stocks, 30% crypto is the bifurcation or division I would give. Should we use screeners? Yes, Piyush. Screeners make your life very easy. There are 5,678 stocks in NSE. It is not practically possible for you to screen all of them. So definitely screeners will help, which gives you a filter, and you only look at things of quality. Is the market in a bubble? No, I don't think so. The market is in a bubble. I think the market is pricing in. See, you need to understand, stock markets are forward looking. Okay, I think that is something that you have studied all your life. If you're a commerce student, stock markets are always forward looking. They will always look at the future earnings, future growth, future cash flows, right? So the market is pricing in a lot of future growth events because of lower interest rates, because of all of the infrastructure spending that's going to come in. So I think the markets are decently priced at this point. And even in this market, yes, there are a lot of stocks which are heavily overpriced. Something like Nykaa, I think this is pure garbage. You can't have Nykaa and Tata Steel. Tata Steel earns 8,000 crores as their quarterly profits. Nykaa had 2 crores of quarterly profits. They're valued the same. Now, this is where you can say this is a bubble. Okay, Nykaa is purely, in a very bad valuation state. And you saw with the Paytm IPO failing, right? It failed horribly because Vijay Shekhar Sharma literally got too greedy. These new IT stocks or new tech stocks, I think you have to be very careful in investing in them. But I think these age-old companies which are doing extremely good, having a good market, market share in things that they do, I think that's pretty good. Okay. Should we be worried when every time there's a news about market crash? See, this is all crap. Okay, market crash and all never happens. Market crash, when it will actually happen, then also this news will come 2 days later. Okay, when Nifty will fall 5%, then the next day, oh my God, market crash. So, and I think I'll tell you one thing, okay, and this is for all of you. You're probably not a part of the market crash which happened this year, but in the next 6 years, there's going to be a good market crash because of any other reason. It could be because of a pandemic, it could be because of some geopolitical situation. But when you invest in these crashes is where you make a lot of money. And I'm not talking about trading, I'm talking about investing in companies. Companies like Jindal Steel, companies like Reliance were available at such a deep discount in 2020 March. In 1 year, these stocks have created so much wealth. And I'm only talking about mainstream stocks. If I talk about stocks like Tanla's platforms, from 50 rupees, the stock went up to 1600 rupees. So these opportunities you will only get in market crashes. So whenever market is crashing, be happy. Yes, your portfolio is going to go down for a bit, but you can actually get a very good companies at very good valuations. Should we trade options? Please don't. Options trading is, again, I don't want to get deep into it, but they are designed in order for you to lose money. You should trade options only when you're properly skilled and you know the art of risk management, and when you know how price move. How can I know to continue or withdraw Balakrishna Industry stock? See, again, stock to stock, it's a different thing. If you want to know whether you should be staying invested in the stock or not, go to the annual report, read it out, look at some broker research statements on what these brokers are saying about Balakrishna Industries. Analyst conference calls is what you should be looking at. All of these things make you help understand what the company is trying to do and why the price is doing this short options. Again, option selling, Vivek, is again another skill, which requires a lot of training because it has a lot of risk. What about Evergrande crisis? See, Evergrande, China. Okay, just to let you know the China situation. So China is in a very bad state at the moment. Evergrande is basically the biggest real estate company. It has defaulted now. 25% of China's GDP is because of real estate. And this Evergrande crisis will reduce a lot of investor sentiment in China when it comes to real estate investing. That is there. But there is a reason why China is not bailing out Evergrande. And the reason is China doesn't want to increase more inflation in their country, and they don't want to step in with these measures. It will have a short-term impact, but it is going to be beneficial for Indian real estate companies. Yes, Chinese construction activity, manufacturing activity will go down, but some banks and this Evergrande crisis, China will have a very smart way of getting out of this. Evergrande is not going to crash like Lehman Brothers, that is for sure. Evergrande is just defaulted on a payment, and I think China will do some subsidies for them or will grant them some loans, which will again get things back to normal. I don't see a very big impact with Evergrande coming in. So yeah, that's, I think, about it.
I think we are done with the questions also. And I should say it was a very great session. We learned a lot. And I will say to improve is to change, and to be perfect is to change often. And as I said before the session started, this session really changed our thinking towards financial literacy, trading, and stock market. We also learned some of the great tips and tricks of real trading that you all taught us while sharing the screen and everything. Now I'd like to invite Poorna Chawla to give the formal vote of thanks. Poorna. Poorna, can you unmute? Mehdi, can you make her go? Yeah.
Good evening, sir. On behalf of the principal, faculty, and whole ECSH committee, I would like to thank you for removing the time and gracing us with your findings and opinions. This session has been an extremely informative one and a great learning experience for all of us. Once again, thank you from the whole ECL and Skill Up committee.
Thank you so much, Poorna. Thank you so much. We'll be sharing the feedback form in the chat box and also on the YouTube live. You can all fill the feedback forms.
Thank you so much, guys, for making me a part of this. I wish you all the very best. You can contact me if anyone wants to get in touch with me to take any advice or anything where I can just guide you in whatever I have done. You can connect me on LinkedIn, on Instagram, any place you can connect me. I'll be ready to help in whatever ways you want to. And if you want to intern at Havenspire, I think Somesh will share the details with you. You can work with us. We are also a fairly young startup. We just got funded, so I think we are also looking at bright minds like you all, who has that thrive and passion to kind of explode whatever, pick an industry and dominate kind of crowd. And I think I saw that from your participants. So I think I'll wish all the very best. Thank you so much for making a part of this, and thank you so much once again.
Thank you so much, sir.
Thank you, sir.
Thank you. Bye bye, guys.
Bye.
Bye, sir.
Everyone, the feedback form has been shared in the chat box. Please make sure you fill it before you leave the session, because only the feedback form will record your attendance and credits. So please make sure you all fill it. It won't be circulated on any group, or it won't be opened afterwards if you miss the feedback form. So please make sure you all fill it. And thank you for attending the session. I hope you all liked it.
We can stop the recording.
Somesh, the link in the YouTube live is not working. Can you just check what's the issue?
Yeah, I'll just check. It's working now. Guys, once you have filled the feedback form, you can leave the meeting.